How does income tax work? This short video is going to look at the concept of income tax and break it down into how it actually works in the UK. This is one of the common misconceptions that I hear people talking about all the time when it comes to working out how much tax they actually pay. So let's start with the basics. What actually is income tax? Well, it's actually the tax that you pay on any income that you receive. There are some incomes which are exempt from income tax, and we won't cover that in this video because that gets really complex. However, you can find this information out by simply googling or any search engine on the internet and finding it straight away on the government website. The government will typically collect the income tax and use it to spend on public services, so teachers, doctors, nurses, the police, fire. So any service which is a public service, typically that income will be used to pay for those. Most people in the UK, strangely enough, dislike paying income tax or any form of tax, and the tax is designed that the more you earn, the more you pay. Now you may be thinking, well, how much income tax do I pay? Now the rate of income tax is actually set by the UK government, and that's done by the Chancellor of the Exchequer, typically once every year when he conducts his budget. But let's take a look at those income tax rates. As you can see here, I've got the income tax rates for the current year, so this is 2015 to 2016. So you have something which is called a personal allowance. Now the personal allowance, which says £10,600, means how much you can earn tax free. That is what the government is going to allow you to earn personally, and you don't pay a single penny of tax on it. That's why it's called your personal allowance. You then have what's called the basic rate of tax, and that's taxed at 20%. And that will be any income that you earn between £10,600 and £42,385. And any income between that you will pay 20% tax on. You then have your higher rate of tax where you pay 40% on. Now the 40% rate of tax is paid on any earnings or any income that you have which is over £42,385 all the way up to £150,000. And if you're lucky enough to earn over £150,000, then you're paying what's called the additional rate of tax, and that's 45%, and that's on earnings over £150,000. Now, the misconception that I typically hear is people look at that and go, oh, I'm in a job that pays £50,000, and that means that I must be paying 40% of £50,000. Well, no, it doesn't work like that, because think about it, everybody gets a personal allowance, so you have to first take away from your earnings the £10,600, and then your remaining amount, you then have to find how much of that is going to be taxed at 20%, and anything remaining then will be taxed at 40%, and obviously anything still remaining, if you were in a job maybe of £300,000-400,000, then anything remaining then is taxed at 45%. So everybody does get £10,600 totally free, no matter how much you earn, as long as, of course, as you're earning £10,600. So what I'll try to do is, without the numbers now, try and explain that. Now, this is, like I say, people typically get confused by how it works. People just rely on their employers to do the calculations, and they assume that it'd be correct. But do they actually know if it is correct? So how would you work it out for yourself? Well, firstly, you need to get your annual salary or your annual wage. Then you need to take away that personal allowance I talked about. Then you need to find 20% of the next £31,785 that you may have. If you've still got money left, then you need to take 40% of any remaining, all the way up to £150,000. Then if there is still left, then you take away your £45,000. I'm stressing this because I'm hoping you understand it, because I'm going to go through some worked examples now to see if you can work it out. Let's look at example 1. So in example 1, Emma's a student. She has a part-time job where she earns £6,000 a year. So what we need to do with Emma now is we need to deduct her personal allowance, which is £10,600. Now the eagle eyes around you there will be thinking, well, hang on, she's still got £4,600 of her personal allowance left. That's perfectly fine. So what actually she doesn't pay any tax at all, because Emma can still actually earn another £4,600 and she won't pay a penny of income tax because she hasn't got past her personal allowance for the year. And remember, the personal allowance will start once again. So that's why most students, as long as they're earning under £10,600 a year, shouldn't be paying any income tax. Let's look at another example. This time Jacob earns £30,000. Now, because obviously we know that Jacob earns £30,000, firstly we need to take away his personal allowance of £10,600. That means that Jacob now has a remaining amount of £19,400 to pay tax on. Now we know that falls still into his basic rate of tax. So Jacob needs to pay 20% tax on that £19,400 he has left, because he's got nothing else remaining. That means that Jacob in total should pay £3,880 per year. Straight away you're probably starting to notice that that wage of £30,000 isn't £30,000, it's more like £26,000. That's the impact that tax has. And remember, we're only looking at income tax here, there are other taxes you pay. Let's get another example. Okay, Jane earns £70,000 per year. So she's earning more money, she's a doctor. Again, Jane's entitled to her personal allowance, so we need to take away a £10,600, and that means we've now got a remaining amount of £59,400. Now, we need to find 20% of basically the £31,785 she's entitled to at the basic rate of that £59,000. So, then we're still left with £27,615, which will be taxed at the rate of 40%. Of course, now she's going to pay more tax. So let's try and break it down to the next slide. As you can see here, at the basic rate of tax, Jane's going to pay the full amount of £6,357. And at the 40% rate of tax, which she's got for everything that's remaining, she's going to pay £11,046. When we add that together, that means that Jane is actually going to pay £17,403 in income tax for the year. Again, look at the wage that she earns, and then you take that away, and you start to realise that actually it's close to £50,000, not £70,000. That's the impact that tax has on your earnings. And again, as I said before, that's before you take away other taxes which are imposed, and pension contributions, and other deductions that may come out of your wages, like a student loan and repayments. And people don't consider this when they pay tax. So what you should spot, you should have actually spotted that as the amount of income that people earn starts to increase, so does the amount of income tax that they actually pay. Remember though that the percentages on the increases are when they go over the threshold levels and not on the whole amount. So like we talked about before, Jane doesn't pay 40% on all the £70,000 that she earns. She only pays it on that remaining amount after she's taken away her personal allowance and her basic tax rate. And just remember that just because you might earn £43,000 doesn't mean you're going to pay 40% on the whole amount. However, as you've already seen, because you're told that you earn £43,000, that's totally different to the amount of money you actually take home. They're all considerations that you need to think about when we talk about tax. Well, that's it. You should now hopefully understand how income tax is calculated. Don't forget you can follow me on Twitter, it's @BeeBusinessBee. Go and like my Facebook page, that's facebook.com/BeeBusinessBee. Subscribe to my YouTube channel, that's youtube.com/BeeBusinessBee. And don't forget to visit my online hive, which is constantly growing. It's had a new look for 2016 at www.beebusinessbee.co.uk. And remember, keep buzzing!